Ladies and gentlemen, open banking pioneers, welcome to our campfire, and it's good to get together. Did you hear that collective sigh of relief on Monday morning at the news that HSBC had bought the UK arm of the collapsed Silicon Valley Bank? Well, being a founder and a chief exec, let me tell you, it's an absolute privilege. It's exhilarating. It's, it's rewarding to nurture your business and to nurture your team. But the SVB collapse also showed the other side, just how windy a place it is for a fintech founder. The responsibility and, yes, the stress of protecting your business, your team, your customers, and not to mention those fintech founders that have got structured debt on their balance sheets. So you bet the industry collectively sighed with the relief on Monday. Delighted you're all in safe waters now. Now, we've an all-female panel today, which is in honor of International Women's Day. But we've also Louise Smith. Now, she's the chair of Innovate Finance on our panel. Now, her team worked tirelessly, if I can say the word, I'll do that again. Her team worked tirelessly over the weekend to support the industry. And we've asked her just to say a few words, and it's only right that she does now. So, Lou, over to you.
Thank you, Helen, and thank you for inviting me to speak today. So firstly, before I do anything, let me thank the FinTech and the financial services industry for pulling together, including yourself, Helen, and the open banking team, who were just outstanding. I think if something that we learned over the weekend is just how much this community can pull in when we need to, and in quick order. Obviously, the events over the last few days are still playing out. We're still seeing that represented within what's happening on the markets, and I'm sure still more to come. But this was the first time that we really saw the implementation, actually, of the resolution framework since the banking collapsed in 2008. Now, we've also seen so much on this on social media. Some people have likened it to, did we react too quickly? Did we not react quick enough? Is it the right outcome? And time will only tell. There were a number of solutions on the table, but I think more importantly for me was speed. I have a huge gratitude to every single person, whether you're firmly in the industry, you sit on the side of the industry as key partners to this industry for that speed, because I think for me, that was the thing that absolutely needed to be played out over the weekend. And to come to a point where we had an answer before the markets opened on Monday morning was quite phenomenal. And we saw people provide information when was needed. We saw solutions come from heritage organisations and the fintech community themselves. We still have issues and we're working those through. And hopefully we don't see that contagion effect. And I think that speed also demonstrated the need to actually stop that from happening. The thing that I'm taking away from this, because I'd like to avoid, is it the right answer or not? And I have a deep gratitude to every single person who put a solution on the table, HSBC, Bank of London, Oak North, and others. But actually, if it's done anything, it's also lit a fire in our disruptors, in our innovators, and in our founders to continue to do more. And what we're here for is to actually deliver better for customers. So I'm hoping that we can also face forward and continue to drive a better industry outcome for those customers. But a massive thank you to the Innovate Finance team and every person who gave up their weekend to actually deliver a better outcome than when we started the weekend. Back to you, Helen.
Thanks, Lou. It really is a story that brings home the true sense of community that we have surrounding UK FinTech, and we all saw collaboration and action. And so to bring us back to the reason that we're gathered around our campfire, it's March, and as the end of the tax year beckons, wealth managers across the country are going to overdrive to lock down ISA season for another year. But are they thinking too tactically, I wonder? Around the developed world, the largest ever generational shift of wealth is taking place. Now, in the US alone, 68 trillion will pass from the boomer parents to millennials. And these are a fundamentally different group with fundamentally different views on wealth. Now, to compound all this, studies show that millennials have they have a different perspective. They have zero loyalty to their parents' wealth managers, and yet they have sky-high digital expectations. So these same millennials may, they're looking at accumulating investments now, but they're a drastically underserved group by the traditional wealth managers. Now, I was looking at some figures, and the FCA say that people with more than £10,000 of investable assets may well need professional support. Yeah, whilst figures from Royal London show that the average IFA could only take on clients with at least 48k in their pots. So for people in the middle, welcome to the advice gap. That's the gap between when you need the help and when the wealth managers in the industry can profitably provide it. Now, this has got to have disruption written all over it. It really has. So we've a group of people largely underserved and with no loyalty to incumbent providers who are about to become the most single important group for the wealth managers to attract. If only there was a technology that could help. I feel like there should be a bit of a fanfare here. But open banking can and will be pivotal here. It's the data insights that will help the young tech-savvy investors take those first steps to accumulate wealth. And as we know, open banking payment adoption options will remove the friction from the onboarding process and deliver seamless and far more cost-effective route to market. Now, for me, these are just two good reasons to start, okay? Now, I've done my part, I've set the stage, and we are here now to understand how this will play out. And we have a team around this table of all women, and they are an absolute experts even in their fields. And they're going to share what we need to do to get ahead of this curve. So let me pass the mic, and it's my absolute pleasure to do that to Sonia from the FT. Sonia, it's fantastic for you to host our panel. I believe you've just got in from Thailand, so you're looking radiant, you're not looking jet lagged at all. So Sonia, over to you. I know you're going to start with a fireside chat and then widening it out to a panel. Sonia, thank you very much, all yours.
Thanks, Helen, and nice to kind of be here today, even slightly jet lagged. It's an interesting topic, so it'll definitely be one to wake me up if there's any concern there. So yeah, I'm Sonia Raj, Deputy News Editor at FT Advisor, part of the Financial Times. And joining me today for the first part of this kind of chat is Ripsi Bandurian, Head of Plaid Europe. So thanks for joining us today, Ripsi. I think kind of Helen's kind of set a really good scene for us there to kind of get cracking and start straight away. So I think to begin with, the advice gap is a topic that is quite close to home for me anyway, being someone who probably falls within it. I'm luckier than most, I guess, as I've sort of sat some of the advisory exams and work in the industry, so have some knowledge, but it's definitely an area that I feel quite passionate about. So it's definitely a topical one. So Ripsi, I guess kind of a good place to maybe start our conversation would be by addressing, what the advice gap actually means when we talk about it, and why is it important to address?
Thanks so much, Sonia. And I was just going to say that maybe kind of we'll judge the success of the panel by how awake you are at the end of the panel versus now. So that will be our metric. How big is your smile? But in any case, listen, to your question around what do we mean when we talk about the advice gap, for me, it's very much kind of a key challenge in the context of when we talk about financial inclusion. It's interesting when we often talk about access to bank accounts, that's how we measure financial inclusion. But for me personally, and I think for most people around at least this digital table, that is very much an outdated metric. At Plaid, our mission is to unlock financial freedom for everyone. And I personally, and like you, joined Plaid and open banking in general because the mission speaks personally to me. I'm someone who's moved countries. I've been an immigrant. I've been an expat. Very kind of personally have been touched by the lack of access to financial services and financial advice, and have seen the impact that financial exclusion can actually have on someone's day-to-day, not only their future, but actually the way they behave in their day-to-day. And so in reality, that advice gap is the way I kind of define it, I guess, in my own words. It's the impact on someone's financial well-being as a result of not being able to access the relevant services and the relevant advice to make the most of their hard-earned money today and in the future. And to be honest, to me personally, and I think most of us would agree with that, that's unacceptable in the world where we can harness the power of technology, of open banking, and so many solutions to solve these problems. That really stays unacceptable. Now, elaborating on that a little bit, first, I think the context is incredibly important as well. We've talked about SVB earlier, but I don't think it would be a surprise to anyone about kind of the economic uncertainty and the economic environment in which we're living today. 4 out of 5 people, according to Plaid research in the UK, cite the cost of living as their main economic concern. And when you couple that with 62% of respondents saying that their financial stress has increased in the last year, that is tremendous. So that's the context in which people are saying, I need advice, and how do I get to it? And so when it then comes down to the demographics, and Helen spoke about this and kind of setting the scene, when we see a number of people who have more than 10,000, for instance, to invest, growing dramatically, but the number of people who are able to access services who are kind of in that 10 to 50K gap, that's a giant gap in incumbent players being able to serve individuals and to be able to get that personalized advice. So for me, I'm incredibly energized by the topic today and what we're trying to do as an industry, as we're trying to move it forward and really, truly achieve financial inclusion, specifically in this context of advice.
Yeah, no, definitely. And I think you touched on some really interesting points, because it is kind of one of those things where it's now more of a necessity than it is even a want for a lot of people. And therefore it's kind of, how do we provide for something that is a need rather than a want? And I think that the lack of access that a lot of people have to this space, and access to kind of just knowing what to do, almost, you know, there is no form of financial education when it comes to schools. There's no form of kind of understanding from any other means, and then suddenly you're sort of landed with, oh, I've got this money and I need advice, and okay, I'm willing to pay for it, but I can't access it. So I think yeah, it's interesting to see how many more options are kind of available. So I get, as I kind of understand, Plaid works with clients across Europe and the US. So I guess, is this kind of a particularly UK phenomenon, or do you kind of see clients addressing the issue elsewhere? And if you kind of see it elsewhere, how do kind of countries think differently about this?
Yeah, it's true. Plaid is uniquely positioned amongst other open banking players by being deeply entrenched in kind of the ecosystem on both sides of the proverbial pond, I guess I can say. And the issue is truly across the globe. We see that there are deep similarities in the sense of that there are overwhelming number of people, both in the US and in the UK, who feel that they don't have access to that financial advice. For instance, in the UK, we see statistics around kind of 75% of financial advisors believe that the gap for those who get advice and those who want it is continuing to increase and continues to worsen over the past 5 years. And in the US, you have some statistics that point to 90% of people not being able to get the advice that they would like to get. And the simple fact is, to be honest, that the cost of getting personalized advice is just high across the globe. That's kind of the simple fact. And the bad news, if there is bad news to go with that, is that the cost of the living crisis actually makes it worse, because it's the opportunity cost of the today and of the future for the individuals. And then, but the good news and the flip side of all of this is that digital finance and open banking effectively makes that personal advice much more achievable. And so what we're seeing is actually kind of the differences between consumer behavior between the two countries. In the US, it's interesting that the main reason for using fintech apps for consumers is saving and investing, whereas it's actually different in the UK, where users tend to use the fintech apps more for budget management. You kind of see that different approach to the types of services that are being developed, and we'll hear later from Sam, I think, a lot more on this as part of the panel. And interestingly as well, the pace at which consumers intend to use financial apps is also growing in both economies. So if we look at in the UK, the number of users using financial apps is growing to kind of in the 70s, whereas in the US, that number is also continuing to grow at a similar pace. And
yeah.
So, go ahead.
Sorry, go ahead.
Jump in. Yeah.
Go ahead, no worries.
No worries, Sonia.
No, I was just going to ask you, like, you know, with the figures that you obviously had in the US, with kind of the 75% of advisors saying that that's kind of going up, is that something similar that you're seeing in the UK with the same kind of figures of the kind of change?
So on the financial advisors, that was a UK figure. That was for the UK. And in the US, we see that 90% of people don't have access to the type of advice that they would like to see. Right. Okay, that's interesting. Yeah, it's like overwhelming majority of people. And I think that's what's really important, because the gap is not only like it's in the eyes of the consumer and it's in the eyes of the service provider. And I think that's where the real challenge is, and the real space for innovation as well.
Yeah, and it seems like it genuinely is kind of a global issue in so many different aspects of this industry as well, not just kind of, you know, it's interesting that you were saying some people use it for saving, and you know, here it's a bit different. So it's clear that there is kind of a widespread kind of concern, and this needs to be tackled in some ways. And I kind of speak to advisors and wealth managers on a daily basis, and with kind of some of them are actively trying to do more to close the advice gap, and you know, whether that's sort of through academies or kind of having means of bringing in kind of younger, newer advisors to take on and service clients. But then there is kind of a large proportion of them that don't see it as something they should have to worry about at all. And you know, I can only assume it could be because some of them are retiring soon, you know, and they're not seeing the kind of impact of what this could be long term, or maybe it's just not going to impact them. But in your kind of view, I guess, why do you think it's important for wealth managers to tackle the advice gap now?
I mean, I think there are a couple things that are like absolutely key there. On one end, like the demographic statistics that we talked about, that Helen highlighted at the start, that isn't changing. That is the reality in which we operate. And I think it's either the wealth managers, the incumbents, as I refer to them, they're able to change their business model and actually be able to deliver advice there, or we will see an emergence of digital tools and digital finance tools that will be able to deliver personalized finance in a much more scalable way and be able to reach new consumers. It's where those consumers are getting their advice is very different than kind of the older generations. It's where they access those tools, how frequently they would like to access tools. All of these behaviors are dramatically different, and I don't necessarily know that it's just about kind of reaching new customers for the existing wealth managers, or is it a completely new business model that they need to be innovating from the ground up? And I would say that it's that, actually.
The latter.
Yeah,
because I guess there's a lot of kind of aspects to it that have to come together in order for it to work.
Like it has to be worthwhile for them to be able to do it, right? And I think that worthwhile is not just the type of wealth manager that you have and whether they speak the same language, but the whole economics of the business model have to work. And this is where the exciting space for the innovation really truly is.
Yeah, and I guess it kind of tied me into one of my other questions, which is around obviously open banking is something we're constantly hearing about, talking about, you know, but many sort of, I guess, are a bit skeptical or maybe don't kind of fully get it. So in tying in kind of open banking with wealth management and in this space and staying where we are, what do you kind of think are the challenges to more widespread adoption of the use of open banking data by the sector, and kind of what are the means to addressing them? How can we address them?
Yeah, I think on one end, of course, open banking is a massive enabler of the trends and kind of the underlying digital finance tools in order to kind of deliver on the promise of bridging that advice gap. And there is a lot of friction with account funding and aggregation of accounts that are held away and can become a roadblock for consuming to get access. In fact, we've seen that 9 out of 10 users say that they would actually use an investment app if they could connect their bank account. That is incredibly high. And so being able to remove that friction that Helen was referring to as she set the scene is incredibly important from an onboarding perspective, and then kind of the payments and the ability to seamlessly manage that becomes incredibly important as well. And so as I kind of think about the wealth managers that today are investing really deeply in open banking, I mean, we'll hear later from Sam as well, but if I think about one of our partners, Moneybox, they've recently hit 1 million users, and we're thrilled to be on this partnership journey with them as they onboard and reach new types of users and are able to serve a whole bunch of different types of products in order to be able to solve this problem. And if I think about blockers, to kind of the second part of your question, I think there are a number of elements that are incredibly important. Regulation is continuing to evolve and is enabling richer use cases, but that transition from open banking to open finance and ability to actually include all types of data, which is the market-led solution in the US today. And you see open banking built on top of many different types of accounts as opposed to just payment accounts. And that creates a space for innovation that is significantly deeper and richer and allows us to address kind of bigger use cases and include sources like payroll and taxes and utilities and pensions. I think like ability to give that control is incredibly important. And there is no silver bullet for us as an industry to tackle that. I think it requires all of us to be collaborating and working together in order to be able to achieve that outcome for the user.
Yeah, definitely, because it is again, like we said earlier, bringing in kind of all these different aspects, and it needs to be for the end user, the consumer, you know, as seamless as it can be, and that's only going to be possible with collaboration in the industry. I think there's no real other way around it. I guess before I kind of invite the rest of the panel in, one final kind of crystal ball question for you would be, you know, where do you think, or where do you see us in 3 years' time with this?
Yeah, I'd love to have a crystal ball, especially weeks like this. But dare I say, I'd love us to be super ambitious. I'd love us to be well on the path of executing on the open finance agenda with consumers kind of fully in control of their financial data. And that outcome also meaning that every consumer feels that they have access to the advice that they need. They may choose not to take up on it, and there may be more education, et cetera, to be done there, but people should feel that they have that access. And I think that, as we said earlier, requires kind of that collaboration across every stakeholder in the industry to be able to get us there.
Thanks, Ripsy. So I'll just kind of move on to the panel discussion and invite some of the other panelists in. So we've got Samantha Seaton, CEO at MoneyHub, Faith Reynolds, independent consumer expert and advisor to the board at the Investing and Savings Alliance, and Louise Smith, chair of Innovate Finance, who you heard from earlier today. So thanks all for kind of joining us, and we'll kind of carry on the conversation from there. Just for some housekeeping before we kind of move on to that part, I'll be taking questions at the end. So for anyone kind of tuning in, if you do have any questions for our wonderful panelists, please do send them in, and we'll kind of try and leave some time at the end to go through them. So carrying on this conversation, I'll start with you, Sam. Can you kind of perhaps give us a bit of a backgrounder on the various initiatives that are going on in the wealth management space around open banking?
Yeah, thanks for that. And also, I think following up from what Ripsy has been saying about trying to make the biggest impact, I think that's, you know, one of the really wonderful things about the FinTech community. It's also why it was so important that that work that we heard Louise talking about earlier with SVB about making sure that FinTech community survived, such a catastrophic weekend that we could have had. So because I think all of us are very aligned in terms that we want to help people, and that the difference that I think we have that I don't see quite as easily in a lot of the businesses, not the people in the businesses, but the businesses themselves, because of the DNA in terms of being driven about product. And I said, so the big shift I think that's coming is really wanting to care about the customer. And I think that's something that we here at Money Hub really have ended up in a very good place with some of the businesses where their shift in mindset is from a product-centric, thought to a customer-centric proposition. Now, some of them were ahead of Consumer Duty in terms of that thinking, but actually I think the rest of the industry, the wealth management industry, will be dragged kicking and screaming, if you like, along, into that customer-centric proposition rather than the product line propositions. And that to me is the biggest shift that can happen in terms of helping people, because the only way we're really going to help everyone is actually to work with some of the bigger clients like, Standard Life, L&G, Mercer. These are very big clients that have enormous reach to what I call everyday people, just people like all of us on this panel, people that, don't have £250,000 worth of investable assets. But if we do not get on the, everyone knows, if we get on that journey, 21, 22, if we start saving into an investment early, the benefits, are just staggering for us financially. And I know, Ripsy, you mentioned the cost of living crisis, which has had a big dent, I think, in people's ability to save. We've seen it in our data, actually, an incredible dent in terms of actually people's, disposable income that's left at the end of each month, which means it's really difficult. But that's where I think technology comes in, where you can actually personalize that. So if we have these few years, which are incredibly lean and mean, and we have to really, sit tight to try and make it through, then that's okay, isn't it? That's okay not to invest through those years. But actually, as soon as there's that little bit of free again, to be able to, pick up on that and actually, genuinely have propositions that are effortless. And that's the power of open banking, open finance, and more broadly, open data.
Yeah, no, and I think that you've touched on quite a lot of kind of interesting points there, and hopefully we'll kind of be able to come back to them too. I guess just sort of to stay on the same sort of topic, and Faith, you've obviously been a high profile kind of champion for the consumer perspective for open banking, but as with anything, there is obviously risks associated, and there's always people that are a bit worried. So what is the impact on consumers for the advice gap, and how can open banking be used sort of safely to address it?
I think there's the advice gaps have a kind of a massive impact, and it's sort of almost hidden because we don't see what people aren't doing, if you see what I mean. And so there's this real challenge. I think we've got high proportions, I think noticeably large proportions of people with large investable assets just sitting in cash. And this was identified, I think, back in 2015 by the CMA as part of their order, that these high balances are just sat there and they're not really getting any return. Now, in a low interest environment, that's probably less of a concern. But when you have high inflation like we've seen over the last year or so, actually that's really reducing people's purchasing power, and in effect they're just losing money. And so there's a kind of real level of harm. Before, it might have been about people not getting the best return that they could have got, maybe getting a bit more somewhere else, and also thinking over that long term about the compound interest impact. But now, right now, their kind of savings are being eaten away by inflation. So I think there is quite a level of harm here that is perhaps less visible, and so something we really want to look at. I think just in terms of the other point about sort of financial well-being that Ripsy sort of mentioned, and also that Sam has also talked about, it's just right now, if we kind of get beyond just sort of wealth, actually people just want help with their money, to make sure they're putting it in the right place, that they're able to budget, that they can allocate it in the right place. They know whether it should be in cash, they know whether they should be getting insurance, they know whether they should be putting it into an investment. And that level of help is facilitated by open banking, but it's not widely available yet. And I think that's another area where that people are looking for help, and it's not easy to be found. So just sort of by way of some work that Ty's has been doing, there are a couple of things that they've done some research on. So one was a proposition looking at sort of personalized guidance. So what kind of help might people like? And one of the challenges is that a number of people don't really feel that advice is for them. They've kind of been priced out and, if you like, marketed out. They're not being marketed to. And so they tend to think of it as not being for them. And so TISA is looking at, can we develop some sort of alternative proposals that help people get personalized help they need without the very high cost that these have traditionally been associated with. And obviously technology coming in and making things slicker and quicker can help with that aspect. There's some other work that we've been doing around kind of the people who do access stocks and shares ISAs. And I think one of the most sort of worrying things for me is that in the research, it showed that over 70% of people who've got cash of over 5k sat in a current account or in a cash ISA haven't even considered an entry-level product like stocks and shares ISAs, predominantly because they are worried about loss. And I think it goes to that point about certainty and worry about where can I safely put my money. And so that they overestimate the probability of risk when investing in equities over the medium to long term. So there's also this challenge of helping people manage and inform their perceptions of risk. We don't want to try and change people's risk appetite, but we want to inform their perception of risk for different products. So that's been another kind of key area. And we're doing some different projects around that. But the other thing that I wanted to bring out is the people who are investing tend to be male, tend to live in London, tend to be socio-demographic AB, and think that people like them invest in stocks and shares ISAs. Now that is after controlling for income. So that was if you gave two people the same amount of money in the same background, apart from the socio-demographic bit, women would be less likely, people outside London would be less likely, people of lower socio-demographic groups would be less likely. And so there's also a levelling up and an equality and equity issue here as well. So so there's some real issues here for the industry to address.
Yeah, and I think the key word that I that kind of stuck with me in what you were just saying was the fact that they kind of need to be informed, and it ties in with this whole education issue, because it is this fear factor almost that people don't, until they have enough information, they're too scared to kind of invest in a stocks and shares ISA. And I found that one advisor I'd spoken to in the past had kind of done a chart of, looking at how much money you're losing with the high inflation that we currently have, and how much your kind of potential gains could be by putting it in a stocks and shares ISA, even if you didn't increase your risk appetite, by much. And it is one of those things where there is a need for information, but kind of the border is between whether it's information overload or if it's just enough, and enough for them to be able to kind of make these decisions if they don't have access to advice at the moment. So I think you kind of made some really interesting points, and those stats are kind of crazy to think about when the fact that it is kind of mainly male doing this sort of investing and being in that space. And some other kind of stats that I've actually seen circulated for some time, which are similar to, I guess, the ones Helen mentioned in her introduction, were kind of around the UK and the generational kind of wealth transfer. And I think it was something like 5.5 trillion is predicted to pass on between generations over the next 30 years. So wealth managers kind of not preparing for this could really be missing a trick. And I think it's something that I guess maybe Louise might want to come into on this one, because the recent FinTech investment report showed, I think, failing investment in the UK in FinTech. And so how can kind of open banking help wealth managers to unlock these kind of new opportunities and tie in this generational wealth as well?
Yeah, sure. So firstly, you're absolutely right. We saw a reduction in FinTech investment globally in 2022. It was down 30% from 21. However, 22 was still higher than any other year. So we saw that spike up in 2021 and then a drop off in 22. From a UK perspective, we saw 12.5 billion of investments in 22 into UK FinTech. Interestingly, of that 12.5, 8.9 of it was in the first 6 months. So we are still seeing a huge amount of investment in UK fintech. We're second to the US in terms of ranking. And it'll be interesting to see how that plays out as we go through 23. But importantly, there's been some important points that I just want to underline, particularly from my fellow panelists. I mean, Ripsy started off with, there's been a lot of focus on bank accounts. Interestingly, we need to do more for SMEs. That's been very clear through the events of the weekend and the role that SBP played within that. But in terms of some of the points that Sam made, they're so critical. Now, I still personally hold the view that open banking is one of the most, if not the most important things as a community we need to get our shoulders behind, because it does have that opportunity to solve some of the biggest customer problems we face today. So that switch of focus on customer that Sam talked about is really critical. So if you take 4 stages, they're really rough 4, and my fellow panelists are far more sophisticated in this than me. But like, just to enter into understanding what we mean by wealth. So let's say the narrative that we use is so confusing. We've got to learn to talk about these things to customers in a really simple way. Otherwise, people seek information through other routes, and they're not necessarily always the best route. So how can we actually talk to people in a way that's simple, easy to understand, so that I know what that means for me? And actually, Ripsy talked about education, and I think Sam did and Faith did, about how do we improve that? So that how do we help people enter into this space with confidence, but also so that they feel like there's some level of trust? Then you've got that build and manage. Now, whether that's building wealth or even just managing the environment in which we're in at the moment. And Sam talked about how do we use data to create those deeper understanding of customer and of people, because not one size fits all. That helps us understand and helps customers understand their financial position, how they can manage financial health, wherever that looks like, to try and make better and more informed decisions. That then helps you to drive personalized plans so that we can manage wealth, manage even through that, as I said, that environment in which we're in today. And then you can start to think about, at the right time for customers, what does growth then look like? So you've got that. We need to think about this across those phases of entering, so understanding, building up knowledge, those deep understandings of customer. What does that then look like at an individual level, so that you can start to take action in a way that you feel confident and informed? That then builds trust. And how do you then build trust in the industry and with wealth advisors and with the broader financial services industry? Because that then drives better data. So you can see that full circle. So for me, it's about the things that Sam, Ripsy and Faith all talked about. Is you can see that building through the gap that we have today. So for me, from an open banking perspective and the fintech community that operate either directly in this space or on the side of this space or partners in this space, I think right now it's one of the most important things that we can do.
Yeah, no, I think that you've made some really interesting points, and I think one thing, if I just stay with you for a second, would be kind of to understand, what do you see as kind of the most important issue that open banking can tackle as someone that is kind of in the industry?
Wow, that's a really big question. So, I think in terms of open banking, I think it can tackle all 4. That's why I wouldn't want to say there's one big thing that it can do. I think if we can drive a better understanding, if we can drive personalization to the point where we understand customer, and this not one size fits all, because we've talked about product, which Sam mentioned, and I work in this industry, and I'm going to, self-disclosure here, and I've worked in it for 30 years as a retail banker, 5 years actually in the commercial insurance lines or the speciality, and I don't always understand it. I'm going to be really honest with you, and therefore I don't understand what that can do for me, whether that's pensions, whether that's investments, because we talk about product. And actually, nobody ever really buys product. We're trying to build something. We're trying to manage something. We're trying to fill a gap, you know, whether that's, and I know it's a cliche and I know people use this, you know, buying your home, but what does that look like? Saving for something because I have something that I need to do. I mean, as a personal experience, and you know, I spoke about this just before we came on the call. We're going through a family bereavement at the moment, and you've got accounts everywhere. So my aunt recently passed away, and we're right in the middle of trying to piece together her financial position, you know, before she passed. And it is really difficult. So it's difficult for her children to then make decisions about what do they do. So for me, open banking is that ability to help us understand things better, help us, if we use that data in an informed way, to drive personalization for customers. But I also think from not just the technology perspective, but to build trust in an industry where people and a community that genuinely wants to deliver better outcomes for customers. So I may have answered that in a roundabout way, Sonia, but I don't think there's one thing that it can do. I think it connects that chain for me from a customer perspective.
Okay, I think you gave a really great answer for such a big question, so that works. I think I might bring in Faith here and see if you kind of wanted to add anything.
I think that's I really liked your question. What's the main thing that open banking could do? And I think it is, there is, so across different life stages there are different needs, and the key thing is kind of using data to identify those needs. And I think at the moment, partly because perhaps data isn't made available to sufficient kind of intermediaries who can do that work, or because incumbents aren't incentivized to do it, where you've just got a bank and somebody hasn't shared their data with anyone. But actually identification of need is a really kind of key point here. So there are lots of people sitting with over 10k sat in their bank account, and it doesn't feel like anybody's really targeting that or marketing to them or kind of trying to identify, you know, and help them. So I think there's the kind of concept in which actually identifying, broadening people's horizons. When people do share data, they're able to be referred at the click of a button to get advice, or they can be referred for debt advice if that's what they need, or even just showing, you know, if you save how much you're spending on coffee each week, this is the impact it'll have on your pension. So those sorts of things where it's just helping people identify they have a need, I think is a really kind of important part of the journey. And then I think the other thing is a bit like Louise was saying, but align with people's lives. Like people have different kind of needs, and especially in this market, you know, I talked earlier, I can't remember if it was already on screen, but the different generational needs. So, you know, Gen X is in a kind of position of not really knowing, you know, what their pension pot is, doesn't really engage so much with finance. Gen Y is kind of like the first group to kind of cope with all of the debt that's coming downstream from student debt and struggling to kind of get a deposit together. And Gen Z are actually proving to be a little bit savvier and a little bit more engaged, and looking at the moment to FinTech and other places to get help. And so there's a kind of like thinking about how do you personalize those different bits of life, and also kind of acknowledge that. And I think this is an interesting question, whether the typical financial planning mantra bears out when people are leaving university with so much debt. So normally you'd pay off all your debts and then you start saving and investing. There's a question about whether some of those things need to be really looked at. Anyway, what else can open banking do? So just the other thing was really just around embedding services. So I think this is where I think there's opportunity to really think differently about where people find help and where they actually take advice from, and where open banking is found. So there's loads of apps that help you if you're pregnant and want to have a baby, or if you're in the process of being pregnant. And so, but in that moment, there's a whole load of financial decisions. So how can I be, you know, setting my goal for saving a bit each month, having a milestone, you know, 6 months till your baby arrives and you save a third of what it is you need, those kinds of gamification, but actually linking in. How can we kind of think about that in terms of, you know, if you're on a slimming, like loads of people will be dieting right now, it's March, big time of year, how much money am I saving by not eating out so much, drinking as much wine, eating so much chocolate? What's the deal? You know, tell me and help me kind of like feel excited about the fact that I'm saving some money and that's being swept into a little savings account, and actually that saving is slowly small, but starting small but growing. And then those, I think, Louise, just your point, this is a, you know, later life, we have got, you know, we are an aging population. There are a number of people with kind of like dementia who are struggling with memory loss, and I kind of had some personal experience of this, and actually it's really helpful to have things like account assistants, family that can access sort of like the account, can see what transactions have been made, can see that payments have gone out, can spot when a dodgy payment seems to have gone out, all of those sorts of services. But they're looking at it much more from what is it that people need, so person-centric rather than a product-centric approach.
Yeah, I think the key thing that you mentioned there for me that sort of stood out was around the kind of generational differences and kind of how they are all working in slightly different ways. And, you know, as I mentioned earlier, the current transfer of wealth is seeing millennials inherit money from their boomer parents. And I think Helen mentioned at the beginning that they don't have loyalty towards their the advisors or the parents' advisors, and why should they? I guess when there's so much else out there. So maybe if I come to you, Sam, what does that kind of mean for the kind of wealth propositions that we'll start to see emerging?
I think my perspective on all of this is that we actually overcomplicate it always, and it's because the industry is full of people who are so bright and genuinely, you know, have the ability to think well outside the box. But what the downside of that is, from my experience, is that we over-engineer and overthink everything. We just don't get going. We just don't take something very simple. And just to give you an example, I mean, and this is just off the back of consumer duty data that we've been working with, but it stood out to me again about the simplicity. Like, just keep it simple. So we did some analysis on a segment, 3,000 savings accounts in some data with one of our clients with a balance between £100 and 1.6 million. So quite a broad range. And what we discovered is 32% of those accounts would have been better suited to long-term investment, because 76% of them haven't touched them in 24 months. And this is an instant savings account. So for me, you look at consumer duty and what we're seeing with terms of looking at products, how they're used, the suitability of them, what you realize is we just need to keep it very simple and actually think, do you know what? Let's start with something like that. You could put that money that you haven't touched for 24 months into one of our other products that we've got where you earn more interest. And this is the thing I think we're just not doing or not thinking about, and is so easy to do. Take overdrafts. The use of overdrafts is appalling, and the way we use them. Credit cards, the same. You've got 10 grand sitting over here, and you forget to pay your credit card off. Sometimes I just think we're forgetting about really simple things that we can do, because we've got the technology now. We've got the intelligence, the machine learning algorithms that do this for a living effortlessly. So it's very low cost. And that's the bit I think I find frustrating about the wealth sector not embracing that. Because, it's all very well for them to be in that comfortable zone where they are servicing a certain target of customers. There's only 26,000 advisors. So therefore, they don't need to reach it. But I'd love to think like some fiduciary duty or something that's, in them, makes them feel more obliged to think, actually, let's take what we do for our segment of customers and let's think about how we could apply technology to scale that, because they've got all that knowledge. They've got such wonderful knowledge sitting there, but I'm not quite sure how we motivate them to want to reach that other sector. That's the bit I think we talked about a bit earlier before the panel.
Yeah, no, and it's a challenge, isn't it? And I think a lot of it does come from the fact that people are, from my experience of speaking to some advisors, kind of resistant to change, and then they don't want to kind of make that kind of jump, because it is like, they're in their comfort zone and they're happy to do that. But I think they're definitely missing a huge kind of opportunity if that's sort of not going to be approached or tackled. If I kind of stay with you on this, the use of open banking often goes hand in hand with an increased reliance on artificial intelligence and to classify kind of transaction data. But, if I put it on the flip side, what are some of the risks of using more AI in this space, and how do you think firms are addressing them?
Well, so I have to start by saying, there is no risk that you're going to find using this type of technology compared to the risk you're taking as a business at the moment, the way you're doing it at the moment. I mean, let's just be really honest with ourselves as an industry. You know, you get, what is it? Some email sent in. People don't even know how much they spend on their weekly shop. They just make it up, put it down. Does the advisor know really? No. I mean, you know, half the time the advisor doesn't know how much he spends on the weekly shop. So let's be really clear. The risk that you are taking by not using open banking and machine learning algorithms is like, it's just not comparable. So I'm not one to help you on that, because I just think the risk, in fact, I've said this to so many businesses. If I was to set up a wealth management business today, you would not be allowed to be one of my customers unless you connected all your accounts. Like, I just wouldn't have you. I'm really sorry, because I wouldn't take the risk.
That's fair. And I think it makes complete sense, because it increases a lot of transparency. I mean, it's a bold statement, but it completely is a fair one to make, especially if you are taking on that risk of managing that client.
Well, and I get told I wouldn't have any customers, but I think I'd be all right.
I think so too. I have a strong gut instinct that you definitely would be okay. So I don't think that's a worry. I guess if I just sort of maybe turn to you, Ripsy, and see what are your thoughts on that? What do you think, I guess, are the risks of using more AI in this space, and how, what are your kind of views there?
Yeah, of course. I mean, I think at the end, AI will make things a lot faster and cheaper and easier, and probably a lot more accurate, kind of bring transparency. I was listening to a panel earlier today, and the discussion was, is it payments or data? Which one is kind of more valuable? And wherever there is data, that means there has to be machine learning or AI, which is the best way to actually process that data and deliver insights out of that data. And I think then the question comes down, how do you manage the risks of more AI, right? Like, there will be risks, there are risks that come with using machine learning. And I think fundamentally it comes down to what principles you set out as you start to train your models and as you start to train your categorization engine, for instance, in this case. And when you're classifying transaction data, it's incredibly important to make sure that it's like linked to the intent of the underlying purchase or the transfer, as opposed to kind of the and that becomes incredibly important in the sense of, like, if someone is on Netflix and they're paying a subscription fee, the intent is entertainment, the intent is not subscribe to Netflix. And I think, like, getting those elements right in the algorithms becomes a lot easier than for a wealth manager to be able to derive the right types of insights and be able to then advise someone on the right choices from an investment perspective, et cetera. The other piece that's also really important is continuing to kind of to learn and build on these and adjust. And so building in a feedback loop and building a loop where you are able to adjust that categorization model in the context in which you're operating. So whether you're working with a lender or a wealth manager or someone else, you may need a different types of categorization. So to me, I think with AI, I'm with you, Sam, that I just think it's ever present, and it will make lots of things a lot better. But the principles underlying that are incredibly important, and that's how you teach the machine to do what's right for the outcome that you're trying to deliver for the end customer, not the product that you're trying to build, for the customer specifically. And I think that's where the speed and the beauty of it comes in.
Yeah, both, I think, really interesting points, and I think they kind of, I guess, summarize what the need is for AI, and it's all about, I guess, how it's being used. Same as open banking, I guess, how it will all come down to it, and how it will be used. And I'm conscious of time, so I'm thinking I'll move on to some of the audience questions, just so that we have time to approach them. So one of the questions we got in was, which I'll put to you, Louise. What do you think is holding wealth managers and businesses back in plugging this gap, such as legacy systems, change in general, education, and open banking?
Before I do anything, can I just say I love Sam? That was brilliant. Because she's exactly right. And actually, the two things, we do make things super complex. And by the way, everything that Sam said, we can do today. So this isn't future facing stuff. We can address so many problem statements today. So this feeds into this question. So I think I don't hear any single fintech walking around going, oh, Can't do that because of legacy. Oof, that's a bit worrying because of regulation. What they're focused on is customer and solving customer problems and use cases, but importantly, starting. So I get sometimes when you sit in there, and your question was, that you asked me about what's the one thing open bank. They're massive things if you take them at that level, but actually we can start to address identity with open banking. We can start, I'm not saying just do all of identity, but using open banking and data to address, I don't know enough data to open SME accounts, using data, as Sam said, to actually look at basic budgeting, because there is no risk. There's not, we ask a customer to tell us anyway. So there's less risk in some of these things than we think. Yes, there are challenges with bias in data, and I don't want to not mention that, but we can navigate those risks. So all I'm saying is on this is I think there is a fear around what would that mean for me? Because let's face it, and this isn't just in wealth management, this is in FS more broadly, so in financial services. We've got some fabulous leaders who have built their careers, who have driven careers and are in leadership positions. And there is sometimes fear. Well, what will that mean when I'm a few years off retirement? I think Sonia, you even said this. So what will that mean if I embrace this now? Does that change my role? What happens? So there is a leadership and cultural change, which I think is far harder than any of the tech that we talk about. If you think about transformation, it is a cultural challenge that we have to continue to address, because much of what we're saying here about how we can solve for things and help customers better, we can do today. And they're not legacy system challenges. We can start to make small changes. Those incremental steps become bigger ones. We can help people still understand their purpose, because data, AI, and people mean something better combined. It doesn't replace everything. So we have to talk about things in a simple way as well, which I think Sam talked about, but I think there is a fear, because what will it mean for me?
Yeah, it's definitely, I think, a fear factor, and this kind of fear of change or replacing, as you said, so that's quite interesting. One of the other questions we had, which maybe I'll put to you, Faith, is around obviously you kind of can't have any conversation without the talk of regulation and the new consumer duty. Everyone's talking about it at every point. So this question says, can you envisage a future where it would be seen as inconsistent with the consumer duty to not do a fact find via open banking?
I think there's definitely space within that consumer duty to push that far, because ultimately, because data is available, firms should be taking note of that and should be looking at how they can use that to make sure that they're doing the best job they can. And as I think Sam said, you can ask people, but actually is that backed up with the right information? So I would say yes, I think there's definitely a point in time where I think data will become the norm in terms of delivering better services for consumers.
Great, thank you. And this question is for Sam. The person has asked, how does the consumer duty play into this? Do wealth managers have a duty to design experiences more appropriate to younger audiences?
Well, I don't think consumer duty is telling people what customers you should target and who you should have. So I don't think, literally, no, I don't think so. So there is actually nothing wrong with servicing, if you like, a potentially 60+ demographic audience that are have significant wealth. If that's your target audience, there's nothing wrong with that. And consumer duty isn't also trying to not have people make money, as in businesses make money. So it's not about that. It's actually about making sure that there's a fair product being offered. The value for that product is actually is sense checked, and is not just because unfortunately in financial services we have terrible inertia. So you can inadvertently take a product out when you're 25, which you're still in when you're 55, and you do not realize the world has moved on. You're still paying whatever fees you're paying to that product. And that consumer duty will definitely wipe all of that out. So that will stop. But I guess my question would be, do we have more of a fiduciary duty as the custodians of knowledge in wealth management. Back to my point I made a bit earlier about, I'd like to think that, you know, whoever asked that question, the knowledge that you've got in servicing, I imagine potentially for 40 years you've serviced clients in the wealth industry, beauty. If you could take that, what you've done with those clients in the way that you do it, and you use your knowledge to apply that with technology and at scale, you could definitely help fill the advice gap. So I kind of implore you to do that, but I don't believe consumer duty is saying you have to do that.
Yeah, I think that is 100% accurate. I mean, speaking to advisors all the time, like I said earlier, there is a huge group of them who are actively trying to kind of help close this advice gap through YouTube videos and podcasts and you know, doing all the kind of different means that they can help with. And then there's kind of this group that are just like, no, I'm happy with my clients, and that's that. So there is definitely I think a need for them to do it and use their expertise to sort of help with this ultimately. One of the other questions that we had was from Anthony Morrow from Open Money, and I'll kind of throw it out to the panel and see who maybe wants to take this one. But he asked, does the panel think consumer duty regulations will speed progress by forcing providers to create simpler, better value products and make advice easier to give? So maybe Faith, if you want to go and answer that one.
So I mean, I think this is absolutely central. I mean, and Lou has talked about kind of like the need for simpler information. This was something that came back in the Tizer research, that actually some of the things that people found most difficult and off-putting in the journey were trying to compare between different stocks and shares ISAs, trying to choose funds, and language. And actually, when you just look at the female responses, language is the thing they find most difficult. So if we start with the basics, actually, we need to address the language. And so Tizer is working with a series of partners, including Amplify Global and the University of Nottingham and CMS Legal and Oxera, to see if we can develop some research and look at how not just simplifying information, but also just reconfiguring it completely. Because we do have, I think, Sam, it is very complex, isn't it? Like, it is a very overcomplicated journey for consumers. And I think the FCA's work on a new disclosure framework is really helpful in getting us to think actually about how do we just rethink these journeys that we're expecting people to go through? How do we rethink the information they get? And how do we sort of make sure that people get the information they need to know in a way that is able to inform them both of the risks and the benefits, so that they can make really informed decisions? And I think the consumer duty is really kicking that into touch with things like the consumer understanding principle. So yeah, I think we will see some movement there. The industry definitely at Tizer, we're gathering the industry together and they're interested in that. So I think that's quite an important aspect, is just communications and getting it right.
Thanks, Faith. And I'm going to end on a question from me personally, because I did have one too after all these kind of conversation. Maybe I will put it to you, Ripsy, and we can go full circle from where we started. So how do you think open banking can help close the gender kind of wealth gap and kind of ongoing one that's there?
Yeah, I mean, I think to me, the one thing that open banking does is it enables innovation, and innovation in the ecosystem is good for every customer. And so that's part of the reason why I kind of wake up every morning energized to do what I do, because we don't know every solution. We don't know every product that's going to be amazing for customers. But the reality is that for every amazing product that comes out and every amazing solution that comes out, there will be another one that is better further down the road. And that gives me so much energy. And so when I think about the gender gap, especially when it pertains to kind of the advice gap, as we've talked about today, I see progress continuing to speed up, because more of that progress breeds more progress. And I'm incredibly optimistic about that. And I could spend hours talking about the problems, but that like optimism and the excitement about the future and the innovation within the industry and open banking kind of at the foundation of it really gives me a lot of excitement.
Yeah,
I'll pause there.
And I think with the kind of changes, I wrote an article today just on the kind of pensions changes that are coming in, and you know, one of the statistics that was there was saying that, you know, there is progress in this space, and we are seeing this gender pension gap close a bit more, you know, narrow anyway. And it seemed like an appropriate question to end on when we've got an all-female, all-women panel that, you know, is doing wonders. So I think that's kind of all we have time for. We've ran over a little bit, but it was definitely worth it in terms of the conversations we're having. So I just want to thank you all for kind of being wonderful panelists. I definitely found these conversations really insightful and exciting as we kind of look to the future, and I'm sure our audience will agree. So thanks to all those that tuned in. I'll pass over back to Helen now.
Sonia, beautifully hosted. Thank you very much. I also found it educational, informative, and insightful as well. And Sam, I think your wealth company, should you ever want to set one up, will be bursting at the seams with a client. So I wouldn't worry about that one. I think every female on this panel would be joining to give us your money, or give you our money to invest. So I would like to say thank you to Sam, to Faith, to Ripsy, and to Lou, and Sonia. Thank you very much. It has been an absolute pleasure. I've wanted to, for Open Banking Excellence, to have an all-female panel for a long time. We have a Pass the Mic to a Female campaign. I'm on a real mission this year, an absolute mission, to use our platform so that more women have a voice. And if this panel is anything to go by, it has, to use Ripsy's expression, it has energized me. So ladies, thank you very much. All that remains for me is to thank the team behind the scenes. That's the tech team, the wonderful team at Open Banking Excellence, that without them, this doesn't happen. A huge amount of work goes into every piece of content that we put together. As Lou was saying, everybody's had a long week and a long weekend. So thank you, Kaylee, and everybody else. And all that remains is for me to say thank you very much for tuning in, and to wish you the very, very best of health. Thank you. Goodbye.